Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Market rundown. So the S&P 500 is currently in a tightening range. It was a pretty boring day today overall. The bulls bought the dip this morning. We knew not to be too bearish this morning because the XLF, the financial sector, was up at the high of the day when SPY and QQQ were hitting the low of the day. So as usual, we said if XLF does not break the low of the day, we're not going to see the S&P 500 bears get much follow through. And that never happened. We never broke the low of the day for XLF at that point. So a slow bounce took place. We didn't change any hourly trends. SPY just formed an hourly lower high. A lot of individual names formed an hourly lower high. So we will need follow through tomorrow with an hourly higher low and higher high to change those trends. But all that I'm watching this week, and the only thing that I care about, is the range of the S&P 500 between the low of the FOMC reaction and the high of last week. We have been trading within this range essentially for 9 days now. And if we get a bull break, all-time high is on deck. And if we get a bear break, we zoom out for weekly consolidation. There's a lot of individual sectors and individual names that are setting up for a weekly equilibrium if we lose the daily uptrends. And if that does take place, it'll be all about bear volume. If we see significant bear volume, the potential to lose the weekly uptrend will be there. If we do not see significant bear volume, we will anticipate a weekly higher low will form, and this weekly tightening range will play out through October. So all I care about is the daily range first, and then depending on how that breaks, determines what time frame I'm going to be watching. IWM, consolidating on the daily, has an inside bar. If that inside bar breaks bullish, we'll say our daily higher low is 154.45, and we'll be looking up at short-term resistance of 157.82 and 158.92. If we don't break that inside bar bullish, then we have not set that daily higher low yet, and the consolidation will continue. QQQ had a dividend distribution as well, so it's a little bit misleading. And if we look at NQ, which is the NASDAQ futures for the Qs, we are in a tightening range, same as SPY, or I should say same as SPX. There's one thing I dislike, it's this time of year when we have these dividend distributions and it makes charting a bit more difficult because of those artificial changes in price. But bottom line is we've been trading within this range about 9 days. We have a high, low, lower high, FOMC reaction held support, low of today held support, and we are watching this close range. If it is a bear break, weekly time frame, same thing, high, low of the August dump, lower high, and if we lose the daily uptrend, we look for a pullback and a higher low unless there's massive bear volume to open up the possibility of a straight drop to a lower low. XLF, gap down open today, bulls bought that gap down. Have we changed the hourly trend? No. We have to see hourly trend changes on SPY, on XLF, on individual names if we are going to believe that the bulls are going to be able to hold on into this range for the week. XLF is not in a tight range. It's pulling back. I expected this kind of pullback before the FOMC, but it's consolidating now, and the bulls are trying to change the hourly trend to indicate a daily higher low has been established. XLV, 92.38 is a bit of a double top. Most important support is the low of the FOMC reaction. And actually, it's the day before the FOMC reaction was the low, 90.79. So again, just another sector where we are in essentially an 8 or 9 day range and patiently waiting for a break of that range. There's a potential play looking for a higher low off of 90.79 support tomorrow. Biotech sector, 7 day range, breaking bearish today. No follow through just yet, but if we see red tomorrow, it's a clear bear break, which means zoom out to the weekly, and from there the bulls would have to hold the low of 77.87 and then break the high of 84.12 to change the weekly trend. So weekly consolidation underway, higher low has to form for the biotech sector bulls. The VIX got some upside today, but there's an upper wick. Highest price we've seen in the last week plus was 1580, and we did get over that level. Not very convincingly, but it is a short-term little shift in momentum. Again, if we see the S&P 500 break the low of the FOMC reaction, We'll look for the VIX to head back into the $16, $17 range. If we see that happen, we'll look for gold and silver to get further follow through. So they've been seeing some strength. Gold got the 12-hour, it was actually the 10-hour that I was watching. The 10-hour equilibrium bull break occurred, and we've gotten follow through now. And next resistance was 1524. That has broken. So weekly higher low is established on gold. That is our new benchmark level. As long as 1483 support holds, the bulls are in control of gold. And that's just as simple as I can make it for myself. So that's where we stand. If we cannot break 1557, we'll have a tightening weekly range. If the S&P 500 breaks the FOMC low, the odds of breaking 1557 for weekly continuation will go up, in my opinion. Little bit extended. The 4-hour time frame hasn't consolidated for a higher low since 1498. So next time we do consolidate on the 4-hour, we will anticipate a higher low will form. But it's all about the daily uptrend, which held that double bottom at 1483, and the weekly higher low. Silver was a laggard play. Gold broke the 10-hour equilibrium bullish Friday. Silver did not break its 12-hour equilibrium on Friday. It broke it Sunday on the open. So we had the clear bull break and a ton of follow through. And that's a laggard opportunity. And you can see from close Friday up 3-4%. Very significant follow through. Weekly higher low very clearly established now. So our line in the sand is 1738. As long as that level holds, the silver bulls are in control of the longer term time frame. And the question now is, can they break 1963, or do we have to form a tightening weekly equilibrium if they fail? Daily time frame, anything above 1749 keeps the bulls in control with higher lows. Strong close up at the high of the day, also extended on the 4-hour time frame. So again, wouldn't be surprised to see healthy short-term 4-hour consolidation, if not tonight, then tomorrow. Just looking for a 4-hour higher low. Bull miners are responding well. And again, all of this is with no real weakness in the S&P 500 just yet. Bull break was Friday on NUGT by getting over 33.49. Follow through today by getting over 35.24. Weekly time frame, I would expect a lower high compared to 45.10. So keep that in mind, which means dust, worth keeping an eye out for a bottom fishing play. And this would be a potential scenario. Let's say the S&P 500 breaks bullish, which is still on the table as a possibility from that range. We would look for a weekly higher low on dust compared to 567. We're currently up at 651. So a solid amount of space to form that weekly higher low. Looking at it on the daily chart, potentially a bottom fishing play off of 567 support sometime in the next day or two. I'd like to see it closer to that support level so there's less risk. And I'd also like to be a bit more confident that the S&P 500 can break to look towards that all-time high. So it's not an immediate play that I'm looking for tomorrow, but it's something in the back of my mind that I am watching for. Oil had a bear break on the daily, and then the bulls bought the dip. So can we change the 4-hour trend is the first question. Anything under 59.22 is just a lower high. So we're not changing the 4-hour trend at this point. It's just a bounce, and we're anticipating a 4-hour lower high here. So have to change that 4-hour trend for us to be looking at any meaningful follow-through for the bulls. But unfortunately, with all the news with Iran and all that, this beautiful weekly equilibrium pattern has gotten messy. The bulls still have the advantage because we had the bull break. Obviously, we gave back more than the bulls would like, but we are in a weekly higher low, higher high pattern, and the daily chart is also still in a higher low pattern as far as I'm concerned. So burden of proof is on the bears. It's just not as clear as we would like it to be. You look at the gold weekly time frame, that's clarity. After its bull break, nothing but higher lows and higher highs, and we don't have that on oil. Natural gas, so a break of 251 support and into a bounce. We need to change the 4-hour trend here as well. Anything under 2576 is a lower high. If we can't get over that level, bulls will hope for an inverse head and shoulders pattern to try and change that trend, where we would look for a rejection from 2576, higher low, and then a bull break. And the weekly time frame is very healthy consolidation right now, looking for a higher low and back testing exponential supports. So the bears are going to have to see a daily lower high and lower low to change that. And if we don't see that, if 250, previous resistance, now support, is our low of weekly consolidation, that will be very bullish, but the bulls have proving to do. We're only just seeing 4 pennies off of that level right now, and not even a 4-hour trend change yet. So that's something to keep an eye on as well. 250 was a very clear resistance level that was important, and now it's trying to act as support a couple times. And dust, I'll be keeping my eye on dust. If you're in a bull miner position, there's nothing to fret. The bulls are in full control on a lot of time frames. This is just if I were cash, which I am as far as commodities are concerned. If I were cash, this would be a play that I would be looking at as the bull move is already playing out. So, again, all about this range. SPX, low of the FOMC, high of last week, and waiting patiently for one of those levels to break. We are currently, let's see, we are $13 above support. And as far as below resistance, we are $31 below resistance. So we are closer to a bear break than a bull break, which is why the burden of proof short term is on the bulls tomorrow for an hourly higher low, holding the low of today, and then break the high of today to change that hourly trend and put us right back in the middle of that daily equilibrium. To battle of the time frames. The bears have control of the hourly time frame, the bulls have control of the daily and the weekly time frame, and someone's going to come out on top within the next few days this coming week. Hope you're well, do good things, thanks for tuning in, and we'll see you tomorrow.
This is my buddy Lucky. I'm babysitting this week. Hey, go play. So started planting some perennial flowers for pollinators. There's still a bunch of bees and stuff around making use of them. So I got a bunch more plants that I got to put in there, and then I'm gonna mulch it up. Onions are starting to sprout, but unfortunately so is all the grass that is still stuck in the horse manure that's still alive. So we got 3 rows of onions that I'll eventually thin out. Got to weed that grass today, and then on the other half of this bed I'm gonna do garlic, which I haven't planted yet. I'll do that mid-October. Another little fall bed I got going. So dill on one side, then bunch of kale, bunch of salad greens, and then radishes. And I'll thin this kale and salad about now. I like to overplant the seeds and then just thin them out and eat them as I thin them as little microgreens. And thanks to the help of Joshua, a TCG member, we're trading work for some mentorship. So he's put in a bunch of this manure, so these beds are all ready to go, and I'm gonna let them sprout the grass before I cover them to kill it after it sprouts. And I have a whole bunch more perennials to plant. So this is today's task, gonna plant these perennials. We also got elderberry and what is this, serviceberry. That's gonna get bigger than I thought it would, but I got a nice spot for it because I ran over one of the figs with a mower. And we got some honeysuckle. I'm gonna trellis this up the swing. So I'll start the honeysuckle on this side and I'll make it run up there and go across the top and then come down the other side. And I'm doing some trellising here. This is, I forget the kind of flower that it is, but it's a long drooping purple flower that I'm gonna climb up. And these things are pretty cool. They're meant for gutters, but they're pretty much just a brace or scaffolding for the plants to climb. So I'm gonna see if I can make it go all the way up the light post. Joshua also helped bang out weeding the rest of these blackberries and put a bunch of manure down and then covered it up with the mulch. And we're gonna have a lot more space than I anticipated, so we'll do a bunch of strawberries here, but then there's a bunch of space for other stuff. We'll let the raspberries have the whole, or I should say the blackberries have the whole second row. And then up on the third row, I'm gonna plant a couple trees, probably a pawpaw tree and a peach tree, which I'll have to do in a week or so once I get back from a little trip up north.